China's a big buyer, but they're not the only buyer. But the point is that that's not speculative buying. I mean, China isn't buying gold to flip it. I mean, this gold is not going to see the light of day for who knows how long. China is buying to have gold as a reserve to replace the dollar. And I think that's what a lot of other central banks are doing. They're buying gold to restore gold as, the monetary backing of their currency. And this, I think, is a major transformation in the global monetary system. I think it's on the order of, or maybe bigger than what happened in the 1970s when we went off the gold standard. And so the world went from having the US dollar backed by gold as the reserve to just having a fiat currency as the reserve. That was a significant shift in the monetary order. But now it's not the US going off the gold standard. It's the world going off the dollar standard and returning to the gold standard. And I think that's probably even more significant, certainly for the United States, because we're about to have the rug pulled out from under us. And, we've been living off of the dollar's reserve status. We've used it as a crutch to live beyond our means. We've enjoyed lower consumer prices and lower interest rates and higher asset prices as a result of this privilege that I think we are in the process of losing. So when you point to these other moves up in gold and silver, I think they were largely driven at the peaks by speculators, by retail investors who were, jumping on the bandwagon and pushing the markets to, kind of extreme points, and then they would go down. I don't think we've even seen that yet. I think that retail investors have barely participated. In fact, if you look back at the flows from all of last year and most of this year, retail investors were selling gold ETFs. They were selling gold stock ETFs. So they sold into the rally. They weren't buying. In fact, if you talk to a lot of the smaller coin shops around the country, and I've seen interviews, most of the people that came in over the last few months were people that were selling their gold. They were like bringing in their jewelry to melt it down and get some cash. It wasn't a frenzy of people looking to buy gold. And the institutions, are barely involved. The pension funds, the endowments, hedge funds, they barely have any position in gold. It wasn't until just recently that you saw, more talk from, Ray Dalio although Jeff Gundlach has been talking gold for a while, but a few other people. Morgan Stanley came out in the last month. I think one of their analysts said that we should tweak the 60-40 portfolio to be 60-20-20, where you split your bonds in half and you buy gold. But I doubt they've had any opportunity to make the switch. They've just started to recognize gold's value after denying it for decades. I've been in the investment business for, over 35 years, and I was pretty much a lone voice, as a stockbroker, telling my clients that they should have an allocation to gold in their portfolio. When I went on major financial networks to talk about it, they generally laughed at me, or they accused me of fear-mongering or just trying to sell gold. They didn't accuse a stockbroker of recommending a stock because he's just trying to sell stocks. And of course, I was both, right? I was a stockbroker, but I also thought that people should have gold as part of their portfolios. But that was sacrilegious. But now people are starting to say, hey, wait a minute. Given the fact that gold has outperformed stocks over the last 25 years, if you go back to 1999, when the Dow peaked at 45 ounces of gold, today it's worth, it was 11. I didn't do the math today, but it was, just recently down to 11. That was a 70% decline. The price of the Dow Jones measured in real money, measured in gold. And given the fact that just holding gold, in a shoebox beat the Dow. And I'm not talking about just the price. It actually beat the return because the dividend yield has been pretty low over these years. You actually did better just holding a gold coin. And so I guess, given that, I think Wall Street finally recognizes that, yes, gold has a place in your portfolio. And if that's the case, well, this rally has a long way to go because that means a lot of investors have a lot of gold they need to buy. Meanwhile, the central banks are getting started. I don't think they're nearly complete in their transformation of their reserves. They still have a lot of dollars to get rid of and a lot of gold to buy. Clearly, when gold is at 4,000 and it was at 2,000 2 years ago, the dollar's lost half of its purchasing power in terms of how much gold you can buy with your dollar. So the dollar is losing value against real money right now, but so are the pound and the euro and the yen and all these other currencies. But I do think that you're going to start to see the dollar losing a lot more value relative to its fiat counterparts, either, before the end of this year or next year. And that's going to accelerate the increase in the price of gold in dollar terms. But I think it's already giving you a forewarning that that's going to happen. I think gold is rising as a reflection of a loss of confidence in the dollar, because I think the main reason that gold is being accumulated is because central banks have lost confidence in the dollar and in the fiscal responsibility of the U.S. government or the credibility of the Federal Reserve. So you're seeing it first in gold. I think you'll next see it in the dollar. And then I think you'll see it after that in the Treasury market, where you'll start to see a big drop in bond prices and a rise in long-term yields, despite the fact that the Fed is going to be reducing short-term rates. And I think that is going to be the catalyst for a return to quantitative easing, because I think the Fed is going to try to lower long-term interest rates through its open market operations, where it needs to print money to buy the bonds that the rest of the world is selling. And so that, I think, will be another catalyst to drive gold to even higher levels, because that's just massive inflation. And, the last couple of times we tried QE, inflation, at least the way the government purports to measure it, was below 2%. So the government was able to justify QE by saying, look, inflation is below target. And so we could do this because the goal is to get inflation higher to reach our target. And so, we're going to accomplish that with QE. But if inflation is already well above 2%, what is the excuse for creating more inflation? How do you justify QE when inflation is 4 or 5%? That's
the way
simple,
the government
Peter measures it.
That's simple. The Fed just moves its inflation target to 3% unofficially, and then you've got more QE to be justified.
Well, but I don't think they could do that, because just moving it to 3%, once you move the goalpost once, well, now you've already broken trust, because if you can move it to 3, you can move it to 4. But even moving it to 3 is a big game changer, because that means a 50% increase in annual inflation. I mean, what does that do to the present value of gold if inflation is going to be 50% higher from now until the end of time? But of course, they're not going to achieve 3, because if they give up 2 and they move to 3, well, then they're going to give up 3. They've already proven that their target is BS when they're above it. They don't have, the monetary cojones to do what it takes to bring inflation down to 2%. Well, then why would they have it to bring it down to 3% or 4%? So I think, once they move it, they're done, which is why they probably won't. I don't know that they're officially ever going to say that they have a target of 3. I think they're going to keep a target of 2, but they're just never going to hit it. And I thought it was really ridiculous. In the last FOMC meeting, somebody actually asked Powell about about his forecast, because he pointed out, hey, 2 years ago, you predicted that in 2 years, inflation would be 2%. And now it's 2 years later and it's way above 2%. And you're still predicting that 2% will have 2% inflation in 2 years. And he said, why should we believe you? I mean, what makes you more confident now than you were 2 years ago when you made the same prediction? And Powell basically said, look, we don't really know where inflation is going to be in 2 years. It's just that 2% is our target. So that's our forecast. We just assume that we're going to hit our target, but we have no idea. So in other words, they just make it up. The only reason they forecast 2% is because they want it to be 2%, not because they think it's going to be 2% or they have any reason to believe that it's going to be 2%. So they could just keep on talking 2% inflation just to pretend that they've got that target. But, we're not going to go anywhere near it. What they may do to try to get closer to 2% is not change the target, but change the CPI. I mean, that's how the government operates. You change the methodology for calculating the CPI so that you get a lower number. That's what they did with the Boskin Commission. That's why the whole CPI is irrelevant today, because it's been rigged by the government to have a low number.